So I'm making this video specifically because a number of my coaching students on our coaching calls are constantly bringing up investing in commercial real estate. And I wanted to make a quick video just to make sure that each and every single one of you have a really clear idea of some of the things that not only that we talk about, but also so I had a time to drill down on a couple items that maybe I didn't have time to share in those training sessions. So I made this video just for you. So if you don't know who I am, my name is Henry Eisenstein and I've been a part of over $450 million worth of real estate transactions and I'm only 28 years old. Again, we're talking about specifically investing in commercial real estate. We're going to be talking about a couple key things that are really going to blow your mind here. So first and foremost, I'd like to be really clear. My very first real estate deal was with a partner. So I believe, and I wanted to take some time to talk about why partners are so crucial to investing in real estate. I do believe that it's also important to note that it is very common for people to use partners when buying commercial real estate. It's interesting when people are like, well, I want to buy a deal, but I don't have the money. I agree, and most people are in the same boat. So the reason why they have partners is so that they can pool their money together, or they can pool their resources together, not just money, but also management styles, contracting services, or anything you can possibly think of. There's a reason why people partner here, obviously. Plus the fact that most people also, if they're not on the side of partnering, they're at least going to be a syndicator, which means that they're going to be raising capital, which we're going to talk about later in this video. I wanted to drill down on the fact that most people use partners. So it is totally okay for you not to have all the money, or you might have the deal and no money, or you might have a lot of money and no deals around. It's important to know that it's a totally okay thing to go out and find some partners so that you can go out and do some more investments. I did over 100 single family flips with a friend of mine, and I was not the person with all the money to begin with, okay? I was a 22-year-old, 23-year-old kid to start. But what we did was I had a very, very small piece of equity, a few percentage points, but I was excited to be a part of the deal, and I was helping with certain things, and I learned the ropes. So I learned how to do deals, and I made my little percentage points on the front and the back. It was really, really cool. And I learned a lot on somebody else's dime, which was really cool for me. So even if you hypothetically only got a 1% or a 5% or a 10% equity stake, just to give you an example, guess what? You learned and you were paid to learn. That's a really cool thing because most people pay to learn. So what you're going to do is get paid to learn, which is a really cool thing. Partners have everything you want. Every aspect of the investment world really is done with partners. So I promise you, when you find the right person, you'll see a massive jump in your income or in your ability to grow. And the last thing I want to talk about when it comes to partners, if you're a realtor and you're wondering of how do I get into the investment world easily and simply, you can also just wrap your commission into the deal. So if you're working with an investor and you're like, hey, I'm going to be making $25,000 on this deal, or I'm going to make $150,000 on this deal, and I want to kick in some money, would you be open to me being a small partner in this deal? They're probably not going to say no. Now, are you ready for the biggest controversial statement I might ever say? I believe in starting big when it comes to investment real estate. What that means is the following. I don't believe that you should start off buying a single family or a 2-family or a 4-family as your first investment property. I did that, and I thought that was really freaking stupid. And the reason why is the following. When you have a small investment property, really fast side note, I do believe that you should buy your first investment property as an FHA loan and live in one of the units and then rent out the rest. That's always a smart idea. I'm talking about a strict investment property where I'm going to spend some money and I'm going to buy it, and this is only going to be an investment purchase. I am not talking about an FHA loan as a residential purchase where you live in one of the units and you rent out the rest. That is not at all what I'm talking about right now. This is strictly talking about investment property purchases. My first investment property purchase was a single family home, and I bought it as a rental property. Now, again, if I could go back, I would have just assigned the deal, and I would just rather make $35,000 on that assignment. I'd rather just make the $35,000 instead of flipping and then paying taxes twice, or paying closing costs twice. It just didn't make any sense. That's what I did. Looking back, instead of starting small, because I bought a bunch of 2 families and 4 families, and it was great, kinda, and I made money on every single deal that I did, except for really one single family house. I want to stress to you that if you're going to get started in the commercial world, period, start as big as possible, and I'll tell you why. There is typically more profit in larger properties. This is not a wondering question. There's typically more profit in a much bigger property than in a smaller property. Why? Because the rents are higher, and when you have a much higher margin or more profit, the higher net operating income, this will allow you to have a higher margin of error, which means it's much harder to lose money every month, where you're going to have less money coming in than all the expenses going out. It's much harder to have that type of issue on a much larger property. You know why? Because you have a larger diversification of tenancy. I'm probably not going to lose money on a 10-family if I buy it for the right price versus a 4-family if I bought it at the right price. Why? Because there's more tenants to pay down the debt than there is on the 4-family. The big thing that I want you to pay attention to is you might not have the money right now for that 10-family, which is why we talked about partners in the earlier stages of this video. And if you're going to prospect and or look for them, any type of properties that you should be looking at as investment properties, you should be looking at larger deals. minimum 8, 10, 15, 20 units. The reason why is because you have a larger multiplier, you have a larger diversification. It's a much better investment type to look after instead of a two-family. You have a much easier time losing money on a two-family or a single family because guess what? If you have one person in a two-family who's not paying you rent, that's a 50% vacancy rate. 50%. There's no way you're making your expenses on a 50% vacancy rate. It's just impossible. Same thing with a single family. If you have one person in a single family house and that one person is not paying rent, you're 100% vacant. That's not a good thing, and you're definitely going to lose money. On a four family, it's 25%. You get it. The point is that it's slowly diversifying your income and your expense ratios. Because what ends up happening is obviously when you have more tenancies, people will still not pay you. It's just what happens in this business. If you're an investor, people will not pay you. It's just how it works. I mean, there's a percentage of people. I'm not saying everyone. However, when you have 10 tenants versus 2 tenants, the odds of all tenants paying you versus all 2 tenants paying you, you can obviously see my point here. So, and you have that diversification of people who are not paying, and if 9 out of 10 are paying you, you're easily going to be profitable. Long story short, I would say start big over starting small. Really quick thing I also want to add. I know we talked about the FHA for a second. Besides that FHA, the only other instance that I would ever say that you should be buying a 2-family or a 3-family or a 4-family to start as an investment property is the following reason. If it is a steal, you always buy a steal. Always. You just always buy a great deal. I'm not saying that you have to hold it for 30 years. I'm just saying you always buy it. Now guess what? You can sell it right away. You can assign it. You can sell it in a year, 2 or 3. If it's a great deal, you 100% of the time buy it. You don't ever question, should I buy this deal or not? Yes, you should always buy the deal. That always makes sense. If it's a great priced property, you should always buy the deal. Just know that the approach to it, the strategy, the exit strategy, you get my point here. So it's just, there's obviously variables, but you always buy a steal. Because think about it. If you found an absolutely unbelievable deal and it's a 2-family, that means you're probably going to maybe find it at 50 cents on the dollar. So when in the market's 500,000, you're buying a 2-family for 250 grand. You could sell it maybe the next week, the next month, the next year, and sell it for 500 as an example. And you can make a couple $100,000 after closing costs. Then you're going to pay taxes on a couple $100 grand, and you're going to walk away with maybe 150, 125, 100, or whatever the point is. However, if you find a steal on a 100-unit building and you buy that at 50% of value, and let's just say the properties right now are trading at $200,000 a unit. That means on a 100-unit property should be selling for somewhere in the vicinity of $20 million. Let's say you bought a 100-unit property for $10 million. In 5 years, you refinance that property for $24 million. Let's just keep this as a quick example. You refinance it at $24 million, and then you pull out $15 or $17 million on a refinance with the bank, because the bank is now valuing the building at $24 million because you increased the rents, you did good work to the property. You're pulling out $17 million, you only paid $10 million, so that means you're going to be getting a very large check of several $million in a refinance, which means that guess what? You're not paying any tax on it. And imagine walking away with $100,000 after taxes. Even if it was before, let's just say you refinance on the 2-family and you pull out 100 grand. Pull out 100 grand, that might pay a year's worth of your bills, maybe 2 if you're super frugal. But imagine getting a refinance check for $3 million. That probably is going to be a little bit more of a life-changing check and something you should be targeting, because even if you just brokered the deal, you brokered the deal in a 2-family, and let's just say you make 3%. Obviously, you can make more. Say you make 3% on a $250,000 property. That's $7,500 bucks. Even if it was $500,000, that's $15,000. If you did 3% on a $10 million deal, that's $300,000. And you could even just be the broker and then kick in half your commission. So you can kick in $150,000 on a $10 million deal. You can maybe be a 3% owner or a 5% owner, however you structure with your, with the person who's buying the deal. And let's just say you have 5% ownership. They do a refinance. 5 years later, you have 5% ownership in a building that's now worth $24 million. They do a refinance. They pull out $5 million. You get 5% of $5 million. It's another $250,000 tax-free. Thank you very much. And you still own the property, and you're getting cash flow every single month. I mean, it's a freaking win-win-win situation. You get my point here, guys. There's an infinite amount of reasons why multifamily not only is the best asset class, but that's why you should start bigger when it comes to investment properties, because the amount of profit that you're gonna be able to kick off, you have lower risk, and you have a much higher reward. One thing I'd like to add as another point here is it's about how you speak. Because when you're talking to all these people and you're networking and you're meeting people, what's happening is that you are bringing up, when someone says, oh, so what do you do? You're talking about, I'm a real estate agent. I'm a residential real estate agent. I'm a commercial real estate agent. You are thinking about what you say when someone says, so what do you do? What you say after that is how they're going to now think about you every time your name gets brought up or they call you or you message with them. They're going to think about you that way. So if you say, I'm a residential realtor, even though you're trying to become an investor, I would start saying going forward, hey, I'm an investor and broker. I'm an investor and a realtor. And you tell them, I'm constantly looking for people to invest in deals with me and or who are looking for investment properties. You want to be very direct with how you talk about yourself. You don't want to keep pigeonholing yourself into one little thing. Oh, well, I'm a residential realtor in this town. Why would you say that? It's like the hardest thing in the world for someone to like conceptualize, oh, so I should only be referring this person if I ever hear of someone who's moving in or out of this one town. That doesn't make any sense. So I would recommend that if you're ever talking to somebody who's like, hey, I'm an investor and realtor. You don't have to say commercial or residential. You don't have to say that unless you only do residential or you only do commercial and that's all you want to do. Okay, so I will just tell people, hey, I'm an investor and realtor and I cover the whole state of New Jersey. It's really important to say that because now guess what? That person now can associate like, oh, so they buy deals, they buy properties, and they're also a real estate agent. So if I need them in any capacity, I know how to refer them. You can even be, again, if you want to go one step further, you can, which is, hey, I'm a real estate investor and I'm a commercial realtor or I'm a residential realtor. If you happen to know of anybody who's ever looking to invest in deals, you know, I'm constantly raising money, typically between $50,000 or $100,000 at a minimum, all the way up to $1 million plus. That's a really cool thing to hear. That person's gonna be like, oh, okay, so if I know any people who have $50,000 or $100,000 that want to invest, or I have $50,000 to $100,000 or more to invest, I'm gonna call this person because this person sounds like a specialist. You have to be the one talking about it because if you don't want to be a secret agent, that just sounds really stupid. I never want to be a secret agent. And again, if you want to really do big deals, want to do huge deals down the road, it's how you speak because you're going to attract a certain level of individual based on how you talk. And right now, if you're just a residential realtor or a commercial realtor and that's how you keep talking about yourself, how do you think the people who you spend time with are talking about you? Because they're not going to talk better about you than you talk about yourself. Because if you only like, I'm a commercial real estate agent. Okay, so when everyone are thinking about you, you're like, okay, well, he's a commercial real estate agent. How are they going to know innately unless you tell them that you're an investor or that you're raising money? Unless you tell them, you have to tell them. Open your mouth. That's going to be really important here, okay? Open your mouth and tell everyone, tell the world that you are an investor and you're looking to raise money, and that's going to allow you to do more deals. It's just how it works. Last thing I want to talk about, super crucial here, and I think this might be the most important point of it all, it's all about the mindset. Because if you have the mindset of like, okay, I'm going to think like a realtor, you're constantly looking at deals saying, hey, how can I list more stuff? How can I list more stuff? How can I sell more stuff? There's also the mindset of an investor, which is what I am. I think about the investor mindset all the time, and that's the only mindset I like to think through. First, the first lens that I have when I'm prospecting is I need to find a great deal today. I want to find a great deal today that I can buy. Now, don't get me wrong. I'm not saying I'm going to buy every single deal. I'm not even saying that I'm in the business right now of buying deals because the market's really weird, but I want to find an unbelievably good deal that I would buy today. Every day, that's my mission because you know what? If I would buy it, so would the next guy. I hope you guys got a lot out of this video. I had so much fun making the video and I'm so interested in hearing. Put in the comment section down below. I am incredibly interested in where you guys are looking for investment properties and what is your biggest struggle and why you haven't bought your next investment property. So like what's holding you back? What's that like the reasoning why you're not buying the next investment property and where are you looking? Because I want to be able to create content for you all around the country and figure out ways that maybe I have a deal that I can be bringing to you right now. So other than that, guys, I will see you in the next video. Take care, everyone. If you're still watching this video, that means to me that you're a committed real estate agent and you're looking to take your life and business to the next level. I'm just curious. Why have you yet to schedule your free, no obligation coaching consultation? All you have to do is simply go in the description down below, and people are telling me this call has been the most unbelievable, the most powerful call they've had in their entire career. And here's just a few of the individuals who have taken full advantage of this call. And my mission is to support as many realtors as possible, build a 6- and 7-figure net income business so that they don't have to rely on this industry anymore for their everyday income. If you're a committed realtor, which I can seem like you are, all you have to simply do to take full advantage of this free coaching consultation is to go in the description down below and schedule your free call now.